you tired of feeling stuck in your trading journey? Endless jumping from one strategy, indicator, and concept without seeing the results you desire. It's time to break free from the confusion and frustration. What you need is a proven system that have already demonstrated its profitability in the market. So my dear friend, in today's video, you will learn my simple supply and demand strategy. I know you have watched tons of video concerning supply and demand zone on YouTube, but nothing seems to be working. I will reveal to you the missing piece that has cost you money for years in this very video. I promise you, after this video, the way you approach supply and demand strategy will change and you will start making money. Without further ado, let's dive into this strategy. Remember, if it's what you're interested in, after getting the value today, don't forget to subscribe. So my dear friend, we have criteria we need to meet in this very strategy called my simple supply and demand zone. Number one is we trade with the order flow. That is, we trade with a trend. Secondly, we make use of one time frame, which is 1 hour time frame. That 1 hour time frame is our entry and is everything. We don't need further complicated stuff to enter the market. Do you understand? So I want to give quick illustrative diagram concerning order flow. Order flow is how the market moves. That is the order of flow of the market at that point in time. So let's take uptrend as a case study. So this is how the market operates when it is an uptrend. It moves from low to high, and from high to low, and from low to high. This is how the market operates. So if you can be able to identify this on your chart without guessing twice or without wasting much time, it's clear, you know that this is good order flow. Now, once we identify this is our breakup structure. On this move, which is our higher high, we need to see those criteria. Number one, this very leg here, we need fair value gap, and fair value gap is inefficiency in a market. When smart money enters the market, there is a significant price move whenever those guys enter the market, maybe banks and institutions. So that fair value gap there is a point of interest to us. Once fair value gap is there, how do we mark our demand zone? Our demand zone may be the last candle before the fair value gap. That's how I identify it. So if you have other ways to identify that, it doesn't matter. What matters is, can you be able to identify your demand zone? So now this is my demand zone, for example. Here becomes my demand zone. So here is the missing piece. Some of you and the other bunch of YouTubers out there will tell you, whenever you spot this and there's fair value gap that break up the structure, once there's inefficiency, you set your pending order inside this demand zone. That's why you guys lose money. You don't do that, because no matter how good a zone is, no matter how good a supply or demand zone is, markets can easily come back, break that zone, and keep moving up or down. So you need to see this. We need endorsement. Endorsement may be in this nature because market is in uptrend. We need to see market moving down in this nature, creating endorsement. This is not ordinary move. I will tell you logic behind this move. This is our endorsement, and this pullback here shows sign that buyers are still interested in this very movement, this uptrend. That's why you see them reacting, and those who trade Fibonacci retracement level will be placing their order. That's why you see those moves. Do you understand now? I hope this is clear. Once you can be able to see market moving down majestically to our demand zone, it means that this very demand zone have 80% opportunity to retain this price and this level. So here is our point of interest, and that is our entry point. So reverse is the case when we are in downtrend. When in downtrend, market makes higher low and lower high. From here, it makes lower low and break off a structure. So we need to see markets pushing back to this supply zone, leaving us with endorsement. Here is endorsement. So this zone is endorsement. So once we can be able to see this move, we know that this very supply zone have 80% chance to hold this price. I hope this is clear. So what about our entry model? Let's move to the entry model. We have the way I enter the market. So now this is the entry pattern I use. First thing I do is to look for endorsement. That is the price retracement back to the demand zone or supply zone. Is there any pullback? Is there any endorsement on that move? If it's a sharp move, I don't look for this pattern. Now, after that, after spotting your endorsement anywhere, maybe up or maybe at the beginning or the middle or before the point of interest, that is your demand zone, these are the pattern we need to see. This is 1 hour candle. The next hour candle is here. I call it power trade. Now, this is how it works. The first candle is here. Second one is here. Second one be lower than them. And this second candle that we mitigate this week here will start up immediately. There's no need to rebreak back into the zone. If you see the price rebreak back into the zone, it's not a valid entry. So once you see the price rebreaking this week, if price rebreak it the first time, you set your buy stop. Set your buy stop here. Your buy stop will be here. Then you target your 1:2. So I call it power of trade model. Here, set your stop loss below this candle. Then target your 1:2. So the market will keep pushing. So that's how it works. So let me give you a quick example before we close this video. So looking at the screen, GBP USD, and now we want to identify our order flow. Can you identify order flow? It's very simple. The market is very clear. Here is your what? Here is your breakout structure. This is your breakout structure. This is the last high. So here, the breakout structure. Do we have demand zone here? We have a demand zone. This is a demand zone, and you see the market how it's pushed down majestically on this version, showing you that buyers are so interested in this move. So this is the entry model, the power trade entry model, the first candle, second candle, and third one. We set our pending order here. Here is a pending order. Pending order buy stop will be here, and you target your 1:2. Then your stop loss will be below this last candle that is lower than the whole tree candle, the 2 candle. Then you target your 1:2. It's your 1:2. See how the market push and give you your 1:2. So you can target the recent clear high out there, but target 1:2. So let's look for another example. So we have another example here. This is breakout structure. It's very simple. Anybody can do this. This is a breakout structure. And do we have our demand zone here? Our demand zone is clear. We have one here, though there's one above here, but we can't use this because this move mitigated this very demand. So we use this as our demand. So do we have such move back into that zone? You can see it's crystal clear. This is higher low. This is another higher low before the market mitigates here. What is our power trade? First candle, second candle, and third candle. Our sell stop is at the zone. This is our set stop. This is on target your 1:2. Very simple. So this is how I do it. I don't want to move further because people will be enticed in what they see. Move straight to their funded account or move straight to their live account and start playing the same way I teach. Go there and back test. Go there and forward test. Go there and write down all the things I said. Follow the principle. If it's not working, come back to me. Tell me what I said is not working, than you implementing it straight to your live account or your funded account. Please, I will end it here. Remember to subscribe. This is very simple. So if you're trading supply and demand zone, this is the best way you can stop yourself from losing money. See you there in my next video. Bye for now.